Now, India's economic growth is stalling as consumer demand is slowing. The broad expectations from the budget include a boost to consumption through corporate and personal tax cuts. Take a look at this report for more on this.
India's growth story is showing signs of cracks. Analysts expect the government to do something about it in the upcoming budget later this week. According to Nomura Holdings, the government is predicted to unveil business tax cuts in this week's budget. This is to revitalize a flagging economy. If put into action, the proposal may alleviate investor concerns by increasing business profits. However, concerns over such policies' efficiency is promoting growth have been raised. Private investments have not yet recovered after the significant cut in corporate taxes in 2019. Signs of a slowdown in broader consumption are highlighted by Hindustan Unilever's lackluster earnings in the December quarter. This has the middle class looking for some tax break. Will the government give in to the middle class hope to boost demand? Poor revenue outlook and profit miss have been the narrative in the latest earnings round. For stock market bulls, this earnings season is shaping up to be a replay of the second quarter, signaling further downgrades. Indian stocks have taken a beating with the $2 trillion rally in the Nifty index showing signs of cracks. A slowing economy, delayed government spending, and shrinking corporate profits have fueled a sell-off in domestic stocks in the new year. With the budget around the corner, the government has a chance to reverse the flagging investor sentiment. The real question is, will it grab the opportunity? Business Bureau Report, WION World is One.
All right, for more on this, we're now being joined by Ajay Bagga. He is a market expert live from Mumbai. Welcome to the broadcast. Now, sir, with Indian stocks taking a hit ahead of the budget, how should one read into the market moves?
Yeah, what is the issue behind the fall in Indian stocks from the high of September last week? Basically, it is slowing economy, slowing corporate earnings growth, what you mentioned in the segment earlier, high valuations, as well as, FIs withdrawing some funds from India. But to put it in perspective, the FI withdrawal is about $21 billion from September to now, on a base of $900 billion that are their holdings in India. So it's less than 2%, about 2% is what FIs have withdrawn. More a function of elevated valuations and slowing growth, which is failing to justify those valuations, along with a very strong US performance, both economically as well as stock market returns wise. So we have seen money going out of emerging markets, and India has also seen its fair share of outflows.
Right. And from a global perspective, what's your outlook for the Federal Reserve and world rates now that Trump is in the office and latest tech rout around the world driven by DeepSeek news?
Yeah, today the Fed meeting outcome will be out late tonight India time. But what we are expecting is the Fed to be on a pause. They have cut rates in the last 3 meetings by 1% in all, and now they will be on an extended pause till about June. They will hold rates and watch the expectations from Trump. How do they get executed on the ground? What is helping them in cutting more rates are the Trump pledge to cut down US expenditure and to bring down oil prices. That will help. But what is not helping the Fed is our Trump tariffs, what you mentioned in the segment earlier. Trump tariffs on imports into the US will be inflationary for the economy, as well as the illegal immigrants, which are about 11 million at least estimated in the US. If a big chunk of them are deported, then there'll be labor shortage and labor wages could go up. So the Fed is watching for inflationary impulses, and they will only act when they are sure that Trump's policies will not be inflationary. Regarding DeepSeek, it's a change of model. What they are representing is a challenge to big tech. in terms of lower cost, but as much capacity in an open source model vis-a-vis big tech, which was offering a closed source paid model, which was built on mammoth investment. So Microsoft is investing $80 billion this year. Facebook is investing $65 billion. Trump met OpenAI, Oracle, and SoftBank in the White House last week, and they announced Stargate, which will invest $500 billion over the next few years. So against that, DeepSeek is offering the same functionality at a fraction of the cost. So it's a big challenge to the frothy valuations of big technology, and that's what we saw on Monday. There was some amount of recovery on Tuesday, but it's a wait and watch mode.
Right.
It was felt that the entry barriers are billions of dollars, but now it might be that the entry barrier does not exist and anybody can come in and challenge this big tech.
All right. Well, Ms. Bhagat, thank you so much for joining us on World Business Watch with your insights on this.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.